Jim, I want to bring you in. Jim Anderson, CEO of Social Flow. Jim, give us a sense. I mean, what's different about this from my perspective? I've been in this stocks game for 30 years, and people are always trying to squeeze shorts. But what's different this time is social media and how that's leveraging the voices here. What are you seeing?
Yeah, exactly. I think, this has some of the hallmarks of a pump and dump scheme. I know you've been talking about that, and that's obviously a concern, but it sort of meets the emotion of a MAGA rally, right? That's what's different this time, is the social media is the mechanism by which it's being amplified, but it's not clear if the greater joy is coming from actually making money or from sticking it to the hedge funds and the Wall Street types, and that's pretty remarkable.
Yeah, but as I keep saying, Sarah, they're only sticking it to the short hedge funds. They're not sticking it to the long hedge funds. If anything, they're helping them out.
You would think so, but something that has been interesting lately is that there's an ETF that's GVIP Go, and it actually tracks hedge fund long positions too. And while today it's having a bounce back up about 3% or so outpacing the market, the S&P, for example, is up a lesser, I'm trying to pull it up right now, 1.5%. But if you look over the past couple of days, there's been talk of some of these hedge funds having to degross, and what that's done is weighed on popular long hedge fund positions as well. Before today, we had seen this GVIP ETF down 5 straight days. Yesterday was down 4.3%. Meanwhile, your most shorted basket was up 9%. So you see others being pulled into it too. And yes, they might mostly be sticking it to Melvin Capital, to Andrew Left of Citron, for example. But the way they view it, it seems, especially when you look at these message boards and you read the way that they speak, they see it as a larger entity. They see it as a larger establishment. And they say that if they can be successful and they can prove that they can move markets and get a group of people together and make a lot of money on the behalf of some of them, then they're sticking it to the man.
So, yeah, it's interesting. And Jim, I've seen from some Wall Street strategists, lists of stocks that have a lot of short interest. I mean, is your expectation as you take a look at what's happening on social media, is this something that's a flash in the pan, or do you think this might be with us for a while, this type of trading?
My expectation is it's going to be with us for a while. Again, the emotion is raw, right? I mean, look at where we are politically and what's going on in the world of politics, and I think this is just the financial manifestation of that. So to say, oh, it's just a flash in the pan and it's going to go away seems maybe not supported by people's emotion. But the other thing I'll add is, we typically look at big tech, right? Look at the Facebooks and the Twitters and YouTube owned by Google, et cetera. But look at the names that we're talking about. Those are there. But really, this is Reddit and Discord and the stock trading app Robinhood. This is not just a big tech story. There's lots of smaller tech involved as well. And I think that the morphing and evolving of this to not just be a big tech story is another piece that we need to follow.
Sarah, AMC is down 55% at the moment. I'm just curious, is this because of the rules that the brokerages put in place? And are we going to see a return to some kind of normality? Because Redditors are not happy about this. They're not happy about not being able to take on the free market in all its glory.
They're not happy about it at all. And it does seem to be the case. Earlier today, so for example, GameStop is currently down 24%. You mentioned AMC, currently down 55%. They were just halted due to a volatility halt, and they just became unhalted and are moving once again. But yeah, when you looked at the news coming out this morning, the first to really cross the tape was from Robinhood, that customers were saying that they were facing restrictions on buying some of these stocks. And you immediately, I mean immediately, you looked at GameStop and it turned negative after trading above $500 a share just within a few minutes. So that does seem to be where this is stemming from today.
All right, both of you, thank you so much for your insights. We continue to follow this story all day. Obviously, the regulators and agencies like the Fed aren't or can't do anything much about this yet, but the brokerages are taking matters into their own hands. We'll see how the likes of the Reddit traders respond to that throughout the day. That is Jim Anderson of Social Flow, and of course our own Sarah Ponczek, cross-asset reporter here at Bloomberg. And once again, AMC is down 55%, but don't forget it did have that more than 300% run up the other day, so it has plenty of room to spare. And in terms of the major indices, we're seeing a bounce back today. The S&P up 1.5%. This is Bloomberg.